Good morning, friends. Good morning, friends. Okay, let's continue with the discussion. We were doing mutual funds. I'll quickly summarize what we did. In the previous session, we started with return analysis. We did two parts. One is called holding period return, and second is called annual return. The base formula is what I get back minus what I give divided by what I give. So, where we learned that if you have per unit numbers and it's no dividend reinvestment, no bonus, NAV1, D1, CG1 minus NAV0 divided by NAV0. If you do into 12 by M, it's called annual return. Without 12 by M is called holding period return. And the 12 by M can also become 365 by days if the question specifically says 1 year consists of 360 or 365 days. Specific words, we do the other calculation. We proceeded and understood dividend reinvestment plan. Under the dividend reinvestment plan, what we try to do is the dividend income comes to us and it is reinvested into additional units. So here I'll have to first get the closing units. To get to the closing units number, we do a calculation which basically says that date, dividend rate, opening units, multiply the opening units into the dividend rate into the face value, or dividend yield into the NAV, or it is dividend payout multiplied with earnings per share. Earnings per share is very rare. Once you get the dividend number, divide by reinvestment NAV, you get something called as units allotted and get the closing units. In a bonus plan, again we do a similar calculation. Date, opening units, bonus ratio, units allotted, closing units. Once we get this number, we go ahead and calculate closing value minus the opening value divided by the opening value into 12 by M or without 12 by M and into 100. The closing value is called closing units into closing NAV. Opening value is called opening units into opening NAV. This is the broad analysis we did in the previous session. Now we continue with this analysis. We were solving one problem. Let us quickly close that. Think back to that question. Question 6. We had done bonus plan, we are done with growth plan. The pending plan is dividend reinvestment plan, which is by Mrs. Charu. We have done two people's analysis. We also learned that NAV is something which will be different for different plan. Clarity will emerge today for you on that area. Let us start this now. Computation of return of Mrs. Charu. Can move this little outside. Mrs. Charu, computation of closing units, computation of closing units, 7 columns, open 7 columns, 8 opening units, dividend rate, dividend in rupees, reinvestment NAV, units allotted, and closing units. Under dividend reinvestment plan, multiple dividends will be paid, and our objective is to get to the closing units. Once we get the closing units, we'll get closing units into closing NAV, opening units into opening NAV, and then get the return part of it. How many dividends are there participating? What are the dividends paid? Tell me the first date. 28/7/2003. What's the dividend rate? 20%. Second dividend, 31st March 2004, 70%. Third one, 31/10/2007, 40%. Fourth one, 3/2008, 25%. 24/3/2009, 2009, 5 dividends have been done. One dividend you do the analysis, same thing will get keep repeating on continuously. Have they used on the dividend percentage? Is it the rate or is it the yield or is there a payout ratio? Anything mentioned there? Anything mentioned on the dividend percentage? No, percentage is there, but anything extra, rate, yield, or payout ratio, if nothing is given, it is dividend rate, and rate is multiplied with face value. Rate is multiplied with face value. So let's start opening units. How much was the investment done? 1 lakh divided by 10, 10,000. 1 lakh divided by 10, 10,000. 10,000 into what percentage? 20% into. Some of you could have completed this earlier also because it's the same thing. I just wanted to do it in the class, but technically it is the same stuff explained in the previous class for one situation. Here we have 5 situation. What is the dividend in rupees? 20,000. What is the reinvestment NAV on this day? 30.7. 30.7. You will get the units 6. I'll keep it as 2 decimal. Practical world, the units can be in 3, 4 decimal also. Depends on the AMC. Generally, I have seen 3 decimals. Generally, 3 decimal in the practical world. Closing is 10,000. You get 10 651.47. Closing is 10 651.47. On this, I am doing it in the screen. You do it in your notebook. We are not discussing anything. Complete this table. Into 10. Writing the amounts here, but I would prefer you to do on your own. If somebody has done this, you keep confirming the numbers. If any calculation error you find, you let me know. The second period ends with 11,927.75. Again, I want you to do on your own. I'm doing it in the screen, but you please do on your own. 11,927.75. Practice will happen only when you do on your own. Any doubts on 11,927? Are you getting this number? Okay. 927 in 47,711.18. 1131.13. Do proper rounding of part and please practice. The requirement is very clear. In my class, I want you to do sums in the class. There are some students who feel they'll just keep listening. Listening alone will not help. You will have to do question. Then only comfort will come. We add this. We get 1358.88. 1358.88. 32 647.2. 647.2. We have an NAV on this day, which is 6.45. What is 6.45? 702.85. 13. 761.7. No. Check. 88 plus 58. Sorry, 85. Sorry. My mistake. 13761.7 into 40%. Sorry, 0.9. Again, there is a reinvestment NAV on this day, which is 48.1. What's the number you get? 1143. Now? Okay. So 13761.73 plus 1143.43, 14906.16. Now, the entire table which we did after doing the first situation, it was just waste of time, or technically we had to do the same thing multiple times. So whenever you do revision also, you need to see which are important, which are not so important area, because time constraint. I keep talking about this because students main struggle is after 1 year when you open the book, how do you cover the AFM again in the easiest possible time or in the earliest possible time, because I need to cover the entire content again in shortest possible time. So every question you will know what are important adjustment, what are not important adjustment, and keep marking them. Can we proceed now? Okay, return computation. Return computation. Repeating the same table. I don't want to change the table itself. Write the table first. Sale value less STT, STCG, value net realization, annual return. We'll try to keep it in the same format. We'll try to keep it in the same format. Same format. Sale value of closing units, STT, STCG, what I get back, amount invested, return, and the annual return. Sale value of closing units, securities transaction tax, STCG, net realization, amount invested, return in rupees, and annual return. Okay, can we start? How many closing units we had? 14.16, and this plan will have its own specific NAV. What is the closing NAV? 3.75, 14,906, 801, 206. No decimal, will not do decimal working. 801, 206 is the closing number. You see the closing number. Here we got 820. Here we got 861. 861 looks very high to me, but generally all the three plan will almost give the same amount. That is how the plans work. So technically there is no difference in the three plan. STT is on 801, 0.2%, 0.2%, 16,602, 1602. Now coming to short term capital gain, any units allotted in the last 1 year, any units allotted in the last 1 year, that is we had decided this is the time. A August 2008 to 31st July 2009. Any units allotted in this time frame will qualify under short term capital gain. Any units allotted from 1st August 2008 to 31st July 2009. If you look at the date, any unit got allotted here. Last one. What was the cost of acquisition of bonus units? Keep participating. Zero. Cost of acquisition of dividend reinvestment is the NAV on the date of reinvestment. Is the NAV on the date of reinvestment. Basically, what will happen in the practical world is dividend will be taxable and the dividend is taken as the cost of acquisition whenever you do the capital gain calculation. The dividend amount is taken as the cost of acquisition. When dividend is declared, that time I pay tax and later I pay tax on the extra income, only on the extra income. Bonus unit, when bonus is allotted, you don't pay any tax. So the entire amount when you sell is considered as a taxable amount when it is a bonus unit. Here, if at all any incremental value got created, what is incremental is I reinvested at 48.1 and when I did sale, I sold this at what rate? 53.75. Sold at 53.75 and reinvested at 48.10. Any doubts on the number? Down 1144.43 into T minus 48 into 10% into the 10%. How much? 647. Very simple. Again, I'm repeating. For bonus unit, no cost of acquisition. Growth plan headache itself is not there because I do not have short term capital gain. For long term, initial 10 rupees is the number. And when it comes to your dividend reinvestment plan under income tax, the cost of acquisition is taken under income tax. The cost of acquisition is taken as the dividend amount or the NAV on the date of reinvestment. Subtract all this and tell me. 798, 957 is what I get back. 7 lakh 98, 957 is what I get back minus 1 lakh 698, 957 and we do the same analysis. 798 minus 1 lakh divided by 1 lakh 12 by 124 into 100. 12 by 124 into 100. Give me the percentage. 64. All the three are almost same. All the three, it should ideally be almost same. Slight variation can come because all depends on what is the NAV when reinvestments are happening. If those days NAV was very low, I would have got more units. I would have got more units and the return can be better also here. Any doubts on this? Understood the base workings? Can we proceed? Clear? Any doubts on this? Okay. Now, let's take an example. I invest 1 lakh today and I get back 5 lakh in year 5. I get back 5 lakh in year 5. Our approach says 5 lakh minus 1 lakh divided by 1 lakh into 12 by 60 into 100. 12 by 60 into 100. This is what we do. 5 lakh minus 1 lakh divided by 1 lakh into 12 by 60 into 100. Can you tell me the percentage here? Sorry? 80%. Now in the calculator, do one thing. 1 lakh, add 80% 5 times. Add 80% 5 times. You tell me what amount you get. You will get something different and I will explain my next concept. 80%, 80% add 5 times. 80%, 80%, 80%. I am getting altogether a different number. I'm getting altogether a different number. I get what number? 18 lakh 89,550 568. Whereas here it is only 5 lakh. Here it is only 5 lakh. Either this 80% is wrong or your calculator is wrong. One thing has happened because I did 80%. This is how we calculated return. 1 lakh plus 80 plus 80 plus 80 plus 80 plus 80. I told my parents we are earning 80% return. So they said let us do in the calculator. 1 lakh plus 80 plus 80 plus 80 plus 80 plus 80. Number is not this. Okay. Do again in the calculator. 1 lakh. What is 80% of 1 lakh? Add 80,000 5 times. 80,000 5 times. What number are you getting? 5 lakh. Now, where is the error? Is 80% wrong or the calculation wrong? What is the issue here then? Understood? No, your answer is right. So the point is this formula does not consider time value of money. It does not consider a concept called time value of money, or it does not consider a concept called compound interest. It is simple interest calculation. In reality, returns are always compound interest. In reality, returns are always if I create a FD 1 lakh 10% interest, they will add 10% 10,000. Next year they'll pay interest on 1 lakh 10,000. They will not pay on 1 lakh. They will not pay on 1 lakh. So technically this is a wrong formula, but still we use it for simplicity's sake. We use this only for simplicity's sake. I can't be using this formula in the practical world. Whichever mutual fund declares result, they don't declare like that. Then what should I do? Year, cash flow, PVF, DCF. Year 0, I paid 1 lakh. Year 5, I got back 5 lakh. Do one positive NPV, one negative NPV and calculate IRR. Do one positive NPV, one negative NPV and do the IRR calculation, which you would have learnt at CA Inter. I will not spend time on IRR now because we have a capital budgeting chapter separately. But the real way to calculate return is this. The real way to calculate return is year, cash flow, PVF, DCF. Why are we still not doing this in exam? Time constraint, because our this calculator can't give me IRR directly. There are financial calculators where you put the number, IRR will come automatically. So unfortunately our institute still doesn't allow us to use the financial calculator. We do one positive NPV, one negative NPV. All that is just waste of time, because practical world I am now going to sit and do one positive, one negative and calculate the IRR. So the return which we calculate can be done in two ways. One is formula, second is IRR. The real approach is to do IRR. The real approach is to do IRR, which they tested in one exam question. I'll come to that question. But the real way of doing the problem is to do the IRR approach and not to do the formula approach. If I solve 10 question, 9 will be solved using the formula approach. 9 will be solved using only one reason, time saving. There's only one reason. There is no other reason why I should do the formula approach. If you tell somebody you invested 1 lakh, got back 5 lakh in 5 years, and if you tell them you earned 80%, they'll think we are fooling them. Reason is, listen, if I do IRR, year 0, negative 1 lakh, in Excel I'm doing it year 1 I don't get anything, year 2 I don't get anything, year 3 I don't get anything, year 4 I don't get anything, year 5 I get back 3 lakh, ERR, and the answer comes which is 38%. Still it is a good percentage, but it is nowhere closer to the 80% number which we were thinking of. Nowhere closer to the 80% number. How to do IRR and all, we'll spend time in capital budgeting. But ideal way of calculating return is IRR in the calculator. Do 1 lakh plus 37.97% 5 times. 1 lakh plus 37.97%. First year, second year, third year, live online guys, you also keep doing it. Fourth year, you will get approximately 5 lakhs. Some differences is rounding off. Okay, 37.97%. So if you tell somebody that I'm investing 1 lakh and I'm getting 20 lakh after 10 years, it is not 20x return and all. You have to bring in the time value of money concept, which is what IRR brings in. The IRR brings in the time value of money concept. IRR says that 5 lakh in the fifth year is not like 5 lakh. You need to bring the time value of money concept or effective compounding. Still 80-90 percentage of my question I will not get into IRR calculation. Only one reason, time factor. That is the only reason, time factor. You give me an Excel sheet like this, I am ready to do IRR for any problem. So last question we did, it is 124 months. So for example, we'll do like this. Future value is equal to present value into 1 plus r power n. Future value is equal to present value into 1 plus r power n. Future value is what you get back. Present value is what you give. R is the IRR. R is the IRR. For the problem which I solved, for example, we get back 798, 957. We invested 1 plus R. We don't know the R. Our N is 10.333. 10 years and 4 months. 10 years and 4 months. Now, your calculator can't do 10.333 and all. Power 10.33, your calculator can't handle it. Excel sheet can still give me the answer. Excel sheet can still give me the answer for 10.33. It will go to the other side. You will have to do power 1 by 10.33. Everything Excel will handle. But unfortunately, our calculator is not able to handle, and this is a constraint with our working. It is generally, even at CA Inter, when you did IRR, they would have explained one positive NPV, one negative NPV. All that is pure waste of time. When I say waste of time, because practical world, either I use a financial calculator or I put the cash flow like this and do the IRR calculation. Here 798, 957, 1 lakh. I do this, and power when it comes other side 1 by 10.333. When it comes to the other side, 1 divided by 10.333. Don't worry about the numbers, focus just on the concept. Anyway, this you can't do in your calculator. There are ways to do it in the calculator. You do some 12 times, some root is some ways there, but still let us just understand this. 22.27% is the return, whereas you wrote 67.64%. You look at the huge difference, 22.27% versus 67.64%. Ideally, I should go ahead and do this approach, do the IRR approach. Only reason you are not doing, your calculator is not helping you to do it. That is the only reason. Or do one positive NPV, one negative NPV, get the IRR through the IRR formula. That is also possible. That is also possible, doing through the IRR route. I'll be doing IRR for one question now. But the point is this, that I need to ideally do this. And if you tell somebody we earned 67%, he'll be like, huge return. Practical 22 is also huge return, but there is a marked difference between a 67 number and a 22 number. I can't be saying that I earned 67 and later reality is 22. Understood the concept? Ideal approach, again I'm repeating, is the IRR approach. Our financial in CFA and all, they allow a financial calculator. There the calculator itself gives you the answer, and which is what I want, because I am not going to try to do some trial and error and then get to the IRR. You give me all possible tools. The only thing you can ask me is, do I know the concept or not? Concept is known, and we do it. There's a doubt by a live online student. How did we arrive? I've applied a formula here, IRR formula. Anyway, I'm going to do a problem where we will do IRR calculation. One positive NPV, one negative NPV, and then come to the IRR. I don't have a choice. In your notebook, you have only one way to do it, which is through the one positive NPV route and one negative NPV route. For the practical world, for example, somebody will tell you, this is used a lot in the practical world. I am doing one investment product, year zero. I am investing 10 lakh, an insurance product, and your parents will tell after 10 years, we will be getting some money. Can you calculate IRR and give? You have to write like this, year zero, year one, you have to write every year, okay? Year one, zero means you have to write zero. If you don't write a zero, Excel will remove that in the calculation and it will give a wrong number. Year two, zero, year three, zero, year four, zero, year five onwards, I get back 2 lakh. I get back 2 lakh or maybe some 20 years. I get back 2 lakh for some 20 years and they want to know what is the IRR. This is a financial investment product which anybody can ask you. The year in the side has no use, okay? In the Excel, it's just that you will have to write numbers like this. This is year zero, first, second, third, fourth, fifth, sixth, seventh, eighth. Keep writing the number and in the end, IRR is equal. In the end, IRR is equal to highlight this and it will give you the number. It is in this case 10.94%. If you take any insurance product, they will give some sheet like this saying that invest so much, get back so much, and they will talk about the simple rate of interest. Whereas you need to do the IRR logic and get to know the real return which is being earned. They will say 67% return. The guys whoever are promoting the insurance product, they'll say it is 67. But you know the reality is 22. You know the reality is 22. I'm just giving you an example. This keeps happening in the practical world. They will give you a product. In the product, you search any product, they'll say payout structure of an insurance plan, LIC take. If you take LIC, they'll say you pay premium of 40,000, 40,000, 40,000, 40,000, 40,000. After 20 years, you'll get back 10 lakh and it's a huge return, something they'll say. You do the analysis like this, you will know what is the real IRR being made. At home, if any of your parents have invested in an insurance product, you should try doing this calculation. Tell them this is the return you are generating. It's just a calculation. It gives you a practical application of the concept. Majorly used in insurance returns calculation, can be used anywhere. But I have personally seen many people do a mis-selling of the insurance. Mis-selling means they will say huge returns. Reality is different because they do the 12 by M logic. In reality, you have to do the IRR logic. IRR will say 4%. That will say 20%. That may say 20%. 20% very happy. 4% not even savings account return. Not even the savings account return. So, in the practical world, if all you want to do IRR, you put the data like this. Only condition is this is no use. The only condition is every year you need to write the number. It can be zero also. It can be zero also. Note down the numbers like this and put a formula in the end IRR. It will give you the answer. Only condition is if 1 year, for example, if I remove zero here, it may change the returns 12.16. That zero has no implication, but removing a zero changed the returns because Excel then thinks this is year zero and this is first year. Excel thinks the third row as the first year. That's how Excel works. Okay. So if it's zero, write zero. If it's zero, write zero. Put the formula. It will give you the IRR number. Very useful in a practical world wherever we are doing investments because there is lots and lots of mis-selling happens in our industry, the financial services industry, and people have to do all this to sell their product. So they will tell you something, reality something else. And if you want to cross check this, take any insurance contract which your parents could have entered, and many of your parents may have taken an LIC or some other plan. Put the data in Excel, calculate IRR and tell them this is the IRR. Most of the time, the insurance will not even beat the FD returns. Most of the time, it will not beat even the FD returns. That is how it is in the practical world. Clear? Now, getting back here, this is the concept I was trying to explain. NAV, NAV 2 dates, NAV 4 year. Okay, this is a 4 year data. Annual return formula said 17.58. Annual return formula said 17.58. 4 year returns. What I got back minus what I gave divided by what I gave into 12 by M into 100. Practical world. Parag Parik Flexi Cap Fund. IRR approach 14.24%. IRR approach, I exactly know 14.24, so I discounted at 14.24. When we do a problem solving, we will take one smaller number, one bigger number, one positive NPV, one negative NPV. But this is a practical data, Parag Parik Flexi Cap Fund, and the fund, when they declare their returns, they'll declare 14.24. They are not going to tell you 17.58. They are not going to tell you 17.58 because if they tell, they will come under a lot of scrutiny. So every fund, when they declare the return, when they declare the past data, they declare the IRR returns. They declare the IRR returns. Unfortunately, we are not learning this in most of the question because our calculators don't help us. It is only one reason. Our calculator, because if I tell you this number, how will you know 14.24 is the start? How will you know 14.24 is the start? Then you will do some 13%, one 15%, one positive NPV, one negative NPV, get the IRR. All that extra analysis I am required to do to get to the returns, Able to understand the concept first? Clear? One practical example again. Parag Parik Flexi Cap Fund 17.58, 14.24, and now I go to a question around this. Done? Understood the concept? Clear? This was the concept number. Concept 9, effective yield. Return computed through formula ignores time value of money. Ignores time value of money and is not accurate. Compute return as IRR of the investor. Return as IRR of the investor. Day zero outflow, maturity inflow. Day zero outflow and maturity is inflow. You can use this formula also. Future value is equal to present value into 1 plus R power n, and R is the IRR. You can do this also. Power n should ideally be 2 years, 4 years, 8 years. Our normal calculator can help. Other years, normal calculator can't help. I have a shortcut way to that also. I will discuss it. But generally, if it's 2 years, 4 years, square root can be taken. Cube root can't be taken in our calculator. Cube root or 1 by 5th root, 1 by 6th root, all that is not possible. Understood the concept? Can we proceed? Clear? Okay, coming to question 7. A mutual fund introduces two schemes: dividend plan, bonus plan. Face value on 1/4/2005, invested 2 lakh in plan D, plan B. When the NAV was 38.2, 35.6, both the plan matured. What is the effective yield per annum? Use following PV factor. Go through the question once. There's a doubt in the live online. Is IRR average of multiple years? Not technically average. IRR basically is a compounded return earned. It can't be an average also. You do first year, second year, third year return, NAV 1 minus NAV 0, 2 minus 1, 3 minus 2. Then also it will not match. So it is a compounded return. Go through 7. Okay. A mutual fund introduces two schemes. There's a dividend plan, bonus plan. Face value is 10. When I invested, there is a specific NAV. Previous problem, when I invested, there was no NAV given. I took face value as the NAV for the date of investment. They have given a lot of NAV. I am not going to do any table. I am going to directly take the maturity value from the answer itself and focus on two ways of calculating the return. To get the closing units into closing value, you will have to either do this table or the other table for the bonus plan. There is one table for the dividend plan, one table for the bonus plan. I don't want to waste time. Only thing I know is this is the value on the maturity. 239,003.17. 239,003.17. This is my starting point. This is my starting point, and thereafter I discuss what is to be done. 239,003.2390. Should I solve this at home? I don't even want you to solve also. If you want to do, you do it, but I don't feel a need also, because what was critical is getting to the final number and then focus on two ways of calculating return. Previous question, my focus was getting the closing units. So there we spent a lot of time on getting the closing units. I don't want to repeat this table now. So my start is 239,003.17. What is the amount we invested? 2 lakh. Now we'll see two ways of calculating the return. Why two ways? Because they have used this factor. This is to indicate they want IRR. This is to indicate to you they want a IRR approach to be done, and this is the only problem where IRR is done. Only problem where IRR is done. It is an indication to you that please do IRR approach. Please do the IRR approach. Able to understand the question? Can we start now? Right, return split into two. Formula IRR. Formula and IRR. Return two parts. Formula and IRR. Why should I still do formula? Not mandatory here. IRR alone is sufficient, but I just want to compare side by side. Formula and IRR. Formula, right? Maturity value, investment value, 12 by M, 100. Maturity, investment 12 by M into 100. Maturity value you generally have to calculate. I didn't want to spend time there. I've given you the value. What is the maturity value? 239,000. I hope everyone is okay with this. Live online student, if anywhere there is a doubt, you'll have to tell me. 239,003.17 we have taken from the solution. We have taken it from the solution. At home, you want to practice it. There are few things where I give you a choice. Few places I tell mandatory for you to do. So mandatory one, at least please complete it. What is the amount we invested? 2 lakh. Twelve by 60 into 100. 12 by 60 into 100, how much? 3.90%. Now I have to try the IRR approach. For IRR approach, I need one positive NPV, one negative NPV, and which rate do I start is somewhere given below the table. Somewhere below the table, there is an indication to us. There is a indication to us which rate do I follow. Which rate do I follow? There is an indication given below the question. Indication below the question. Below the question, they have given what percentages? 2, 2 and 4 is for the first plan. 8 and 13 could be for the second plan. 8 and 13 could be for the second plan, because there is a second plan as well as a first plan. First plan return will sit somewhere between 2 and 4%. Whatever you got in the formula, IRR will only be lower than that. IRR will only be lower than that. It can't be higher. So somewhere between 2 and 4, my first plan return is sitting. Second plan I haven't done as of now. That could sit between 8 and 13. That could be sitting between 8 and 13. Any doubts till this? Done. IRR computation. Leave space here and come down. Computation of IRR. We will do the calculation. I will not explain anything on the formula of IRR now. I will spend time when I go to advanced capital budgeting. But still some of you should remember what we did maybe at CA Inter. I will have to calculate one positive NPV, one negative NPV. Year, cash flow, PVF at 2%, DCF, PVF at 4%, DCF. One should give me positive NPV, one should give us negative NPV. 2% and 4%. Year 0 negative. Year 0 is negative. How much negative? Year 0 negative 2 lakhs. And then I get back the amount after so many years, whatever number of years we have. After so many years, we get back the amount. How many years? What money do we get back? 217. The discount factor is given in the question. Follow whatever they have given. Follow whatever they have given in the problem. Follow whatever they have given in the problem. What is the discount factor they have given? 9057. Multiply this. We'll work with two decimals. 239 into 9057. We get what? 2 lakh 16,000. This is the first one. I got one positive. The second one will be negative. Somewhere in between the IRR is going to sit. Somewhere in between the IRR is going to sit. Previous question, even if I want, I can't do this also, because 10.3333 years. 10.3333 years. I cannot calculate the factor. If they give, okay. Otherwise, how you calculate factor? 1 divided by 1.02 first year, second year, third year, fourth year, fifth year, all this basics. Anyway, I'll spend time whenever I do the proper valuation part. Year 1, the factor is again given in the question. 8219 minus 2 lakh 177 9, and this should give me a negative NPV, negative 22087.28. One positive, one negative. This, are you getting this amount? Sorry, 196. Sorry, then 196 436.71. I think you multiplied this into this. You get 196 436.71. NPV is how much? 3563 point. Okay, understood this? You got the number. I needed one positive, one negative. I will tell you the IRR formula as of now. Logic, everything we will spend around 1 hour when I go to capital budgeting chapter. I'll give you the formula as of now. We not, I generally don't do in a formula way. There I'll spend time. Okay, IRR is equal to. Do you remember your formula from CA Inter for IRR? L1 lower rate plus NPV at lower rate divided by NPV at lower rate minus the NPV at higher rate, L1 minus L2 into L2 minus L1. As of now, don't even think much, note down the formula. We will spend time when I go to capital budgeting chapter. Few places I cannot spend time here. This concept more weightage is when I go to capital budgeting. L1 plus NPV at L1 by NPV at L1 minus NPV at L2 into L2 minus L1. Lower rate, L1 is called lower rate, L2 is called higher rate. The lower rate is 2, NPV at lower rate 16 divided by 16, minus of minus will become plus, minus of minus will become plus, 4 minus 2, minus of minus will become plus, NPV at L1. Even if I try to explain, I'll not do justice at this place for the IRR formula. So we will do when we go to capital budgeting. NPV at L1 divided by NPV at L1 minus NPV at L2 into L2 minus L1. Live online, guys. 2 plus how much? Now, what is this number? When you multiply, what do you get? One point. Minus of minus will become plus. Minus of minus will become plus. 16,465 into 2 divided by 20,000, 28.46. 20,000, 28.46. And in the end, you get 2 plus. Any doubts on this? 3.64%. Any doubts on this? Clear? Can we proceed? Any doubts on 3.64? Clear? Now, this took us more time. The earlier approach took us lesser time. And I can only think of this reason ICA tells us to use the other formula. No other reason I'm able to think of. I'm not able to think of any other reason why I should do the other formula. So you go back here and write this side 3.64%, this side 3.9%. Here the gap at least is lesser. When the returns are very high, the gap will be significantly different here. And if the period is more, 10 years, 20 years, again the gap will expand. Again the gap will expand. Any doubts on 3.64? Any doubts on 3.64? One positive NPV, one negative NPV. Any doubts on this? Okay, written till this. Can we proceed? Okay, in exam, if I am running short of time, I'll tell you one quick shortcut to do it in the calculator when you have one outflow, one inflow. Only when you have one outflow and one inflow, right? Future value equal to present value into 1 plus r power n. 1 plus r power n. Future value is what you get back. Present value is what you give. What money we get back? Keep participating, guys. 239. What money did we invest? 2 lakh. 1 plus r power 5. 1 plus r power 5. I can ultimately say 1 plus r is equal to 239 divided by what? 2 lakh. And if it goes to the other side, it will become 1 by 5. Mathematically, when it goes to the other side, it will become 1 by 5. 1 by 2, our Excel, our calculator can handle. 1 by 5, it can't handle. So I'll tell you how you do 1 by 5 power in the calculator. In the calculator may help us in case I want to save some time. May help us in case I want to save some time. In the calculator, 239 003.17. In the calculator, 239 003.17. divide by 2 lakh, take a square root 12 times, take a square root 12 times, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This has no use at all, okay, in the practical world. Again, I'm repeating just for our exam sake, if I want to save some time. Square root 12 times minus 1, minus 1, multiply with this number 1 by 5 into 1 by 5 into 1 by 5 into 1 by 5, add 1 into equal to 12 times, into equal to, I'll repeat it one more time, but first let's try it, into equal to, I get 1.0363. That is what I get in the calculator. 1.0363. 3.63 is the exact answer. 3.63 is the exact IRR. I'll repeat again in the calculator. 239,003.17 divide by 2 lakh, square root press 12 times. Square root press 12 times. You will have to number it correctly. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. After you press 12 times, you get a number, subtract 1. Subtract 1. Multiply this with 1 by 5. What is 1 by 5 is this power. Power. You want 1 by 10, multiply with 1 by 10. You want power 10, multiply with 10. Whatever is the power. Whatever is the power. Into 1 by 5. Add 1. Do into equal to 12 times. Do into equal to 12 times. Do into equal to 12 times. You forget this or you are not able to remember, no problem. Do the normal approach. Do the normal approach. So just write here. Write this alone. In calculator, type 239 divide by 2 lakh. In calculator type 239 by 2 lakh. By 2 lakh. Press square root 12 times. Press square root 12 times. Press square root 12 times. Square root 12 times. Subtract 1 and multiply with the power you want. Multiply with the power you want in bracket 1 by 5. In this case, multiply with the power you want. In this case, it is 1 by 5. You want 1 by 5, multiply with 1 by 5. You want 1 by 8, multiply with 1 by 8. You want 1 by 25, multiply with 1 by 25. Whatever power you want. For example, previous question 10.3333, you have to do multiply with 1 divided by 10.33333 in the calculator. Multiply with the power you want. Add 1. Press into equal to 12 times. Into equal to 12 times. Some of you may be knowing this already. For some of you, it could be new also. Doesn't really matter. Again, I'm saying not mandatory. Not mandatory. You want to do it in the normal approach, do it. If you remember this, you may save decent amount of time in exam. You may save. And if it's MCQ and all, then I'm very, very happy to do this because there I don't need to show the steps also. Descriptive, at least I have to show the step. MCQ, which is 30 mark of the paper, if IRR is asked there, and if it's one outflow, one inflow, one outflow, one inflow. So I will repeat one more time in the calculator. 239,003.17 divide by 2 lakh, divide by 2 lakh, take a square root 12 times. 4, 5, 6, 7, 8, 9, 10, 11, 12. Subtract 1, multiply with 1 by 5, add 1 into equal to 12 times. 1.0363 I am getting. 1.0363 I am getting. 1.0363. Exact IRR here is 3.63%. You do it in the Excel, it will give you the exact IRR. 3.63% is the exact IRR. Able to understand this? Any doubts on this? I am going to repeat this for the second problem. Second problem IRR I'll do it in the calculator only. I don't want to do one positive and one negative. We will just do it in the calculator. Calculator will give you the exact answer. Printed material will do this interpolation. It's called interpolation. One positive NPV, one negative NPV route. Any doubts on this? Can we proceed? Any doubts on the workings here? Okay, going ahead. Everyone done? Live online students, can we proceed? Anybody has any doubts? Any doubts on the IRR computation? Okay, plan, second plan, second plan. Split into two. Formula IRR. Formula and IRR. Formula and IRR. For the second plan, again I'm going to take the maturity value from the question. I'm going to take the maturity value from the problem. We are not going to spend time on that. The second plan maturity value is 3 lakh 31 331 331,205.59. Your major time will get spent on this only. I have avoided that time itself. 331,205.59 minus 2 lakh divided by 2 lakh 12 by 60. Give me a 2 decimal answer. 13 point. IRR will be lower than 13.12. IRR will be lower than 13.12. Clear? Done? Understood? Can we proceed? Other side. Future value is equal to present value into 1 plus r power n. Future value is equal to present value into 1 plus r power n. We will employ that calculator technique on this. We will get more accurate answer. Institute would have done 8 and 13. When the gap between the two rates increase, the accuracy changes. All this I will spend time when I go to capital budgeting. What is the future value we had? 331.59 equal to 2 lakh into 1 plus r power 5 divided by 2 lakh 1 by 5. 1 by 5. Let's do it in the calculator so that you also repeat that analysis. 331,205.59 divided by 2 lakh. Get the number. Press square root 12 times. Press square root 12 times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Subtract 1 into 1 by 5, add 1 into equal to 12 times. 10.1.1062 Now, I would have been very happy to do this in a financial calculator. Why should I do 12 times all this thing? This is not what I would be doing in my practical world. So I would want to do it as in a financial calculator, put the number, it will allow power 1 by 5 there. Power 1 by 5 will be allowed there and it will give me the answer. My focus can only be getting to the number. There is a doubt in the live online. So this question is a dividend reinvestment. If it's a dividend payout plan, then every year you will get dividend. Then you have to do normal IRR only. Year, cash flow, PVF, DCF. First year dividend, write as first year cash flow. Second year dividend, write second year cash flow. Third year dividend, write third year cash flow. So if it was a payout plan, then the shortcut and all will not work. You will have to do year cash flow. Here it is a reinvestment plan. So I get back the money only in the last day, only on the last day. Bonus plan also I get on the last day only. And generally they will ask IRR only for the payout plan, sorry, for the reinvestment plan and the bonus plan. Any doubts on this? Clear? I hope your doubt is done, Pavitra. Any doubts on this? Can we proceed? Understood this working? Clear? Time constraint. If you are running short of time, do this. You have ample time in exam. Please do year cash flow PVF DCF. Reason is very simple, because they are also giving you this to you. They're also giving this to you. So go ahead and do. Why did I still give a shortcut? It is used at many places later. So maybe later when I have to do it in the class, I will do it in the shortcut. In the class for my classroom discussion, I want to do shortcut at few places. Understood? Clear? Can we proceed? Any doubts on the concept here? Real way to calculate return is IR. Yeah, tell me. Okay. Yeah, there's a doubt. Question just uses the word dividend plan. Generally, if they give NAV for all days, institute assumes it as dividend reinvestment. Dividend reinvestment. Can I assume it as dividend payout? Possible. Possible. Assumption wise, both are possible. What does institute's general assumption is? Dividend plan is dividend reinvestment plan. Another doubt by a student, IRR is also an annual rate. Yes, it is an annual return. It is the annual return. That is also annual return. This is also annual return. The only thing is, this IRR considers time value of money. That is in the calculator. If you do 2 lakh plus 10.61% 5 times, you will get 331. Whereas you do 13% 5 times, you will get a higher number. Clear? Any doubts on this? Can we proceed? Understood the workings? Clear? Okay. I'm just giving you 2 minutes to go through this calculation, the IRR part and the previous working. Go through this for 2 minutes. If there are doubts, let me know. Okay. These four plans which we learned came in November 23 MTP as a reverse working question. What is reverse working question is, I give you the final return. From the final return, you go back to the investment amount. You go back to the investment amount. You are generally used to seeing in this order. Now you have to see in the reverse order. What happens, we'll understand in question 8. Got tested first in maybe November 2022 or 21 exam. After that, in new syllabus, they have already tested twice reverse working. Twice they have tested reverse working in your exams also. Let us read this. Measures Corpus and AMC on 1/4/2015 has floated two schemes: dividend plan, assumed as dividend reinvestment plan; bonus plan. Mr. X, an investor, has invested in both the scheme. Following detail except the issue price, except the issue price are available. Date, dividend, bonus ratio, NAV. 3 dividends are there, 2 bonus are there. Additional detail, investment amount is given. What I don't know is the NAV on the date of investment. NAV on the date of investment. Average profit is given. Average yield is given. you are required to calculate the issue price. You are required to calculate the issue price. Issue price is day one price. I need the day one price here. I need the day one price. Same as the question which I did in the previous session. We did working like this. Now you need to go in the reverse order. In the reverse order, generally going forward is easy for anyone. Going backward in anything, I'm driving, I'm walking, going forward is easy. Going backwards is difficult. Same challenge happens in exam also on a reverse working question. Let's spend time again on the question. When did we invest? 1/4/2015. I have been given all the NAV here. Investment amount is also given. Average profit. Any idea what would the mean average profit mean? They've used the word average profit. What can this mean? Return? No, return I understood. Return what? Somebody told the answer. Return per annum. Return per year. Return per year. The word average tells me it is a return per year. Return per year. Basically, they are giving you this amount. They are giving you this amount. They have given you the amount invested. Reverse work and get the net realization. Break the net realization into number of units into the closing NAV. From the number of units, go back and get the opening units. From the number of units, go back and get the opening units. I'm repeating what is given in the question is return in rupees. To know the investment, reverse working will give you net realization, no securities transaction tax headache, no STCG. So net realization is closing units into closing NAV. Closing NAV is available in the question. Closing NAV is available in the problem. What is not available is the opening NAV. What is not available is the opening NAV. For one plan, they gave average profit. Another plan, they gave average yield. Yield means average return and not IRR, not IRR. All general, all normal return only. All normal return. So first, I am going to do this table, particulars, plan 1, plan 2. I will go in the reverse filling. I'll go in the reverse filling. No STT, no STCG, no sale. Okay, sale value of closing units, less investment, return, return percentage, return and return percentage. This will give me closing units. Once I get the closing units, I will have this. From this reverse order, I have to get the first opening. This becomes the closing of the prior. Again, get back. Again, get back. How do we get back? We will see. But I have to get back to the start from the end. From the end, I have to get back to the start. Understood the concept? Can we start? Now do this table. 1 year profit. Yeah, correct. Particulars and two plans. Particulars and two plans. Particulars, dividend plan, bonus plan, sale value of closing units, less amount invested, return in rupees, and annual return. Sale value of closing units, less amount invested, return in rupees, annual return. The filling will happen in the reverse order. No STT, no STCG. I want to keep it as closer to one format which we follow. Sale value of closing units, amount invested, return in rupees, annual return. No STT, no STCG, all that headache is not there. Little easier for us to complete the table. Can we start? What is the return given for dividend plan? Okay, 27,748 into how many years is this? 1/4/2015, 31/3/2020, 1/4/2015, 31/3/2020, 5 years into 5 into 5. into 5 how much? 138. This is not needed. I'm not doing it. Not needed. I'm not doing this calculation for the dividend plan. They did not give percentage. I can calculate also, but why should I waste my time? Not needed. What is the amount invested? Minus 920. Minus 920. Reverse working, the sale value of closing units. 920, 138, 743. How much you said? 10 lakh 58. 1058, 740. Add one more line. Closing units. 1058. What is the closing NAV for dividend plan? Divide by 49. From 21607, I have to go back to the opening units. From 21607, I have to go back to the opening units. How do we go back? We'll see in some time. From 21607. Clear? Generally, we see this order. We have started seeing the reverse working questions. Bonus plan, the return is given. How much is the return? 6.4%. Listen, what is the amount invested? Return is on the amount invested. I earn 6.4% of 10 lakh for 1 year into 5 years. For 1 year, I earn 6.4%. For 1 year, I earn 6.4%. So return, listen, 10 lakh into 6.4% into 5 years. We generally get 3 lakh 20 divide by 10 lakh into 12 by 60 into 100 and get 6.4 and get the 6.4. We generally get the return and get 6.4. Here with 6.4 I get the return. With 6.4 I get the return. What's the number? 3 lakh 20 reverse working. Lakh 20. Closing units 1320 divided by much? 21,607, 30,000 units. 21,607, 30,000 units. I need to now go back to the opening units somehow. Once I get the opening units, I am done with the solution. I'm done with the, because investment divided by opening units is the issue price. Our opening units into the opening NAV is the investment. I know the opening NAV, sorry, I know the opening, I have to get the opening units and ultimately get the opening NAV are the issue price. Any doubts on the two number? Any doubts on the two number? Next, analysis of dividend plan. Of dividend plan. The same format. 8 opening units, dividend rate, dividend in rupees, reinvestment NAV, units allotted, closing units. 8 opening units, dividend rate, dividend in rupees, reinvestment NAV, units allotted, closing units. Closing units. There were totally 3 dividends paid. We will write the dividend in the reverse order to do the reverse calculation. Forward order also possible, but we'll write it in the reverse order. When was the last dividend paid? 1st March 2019. On this day, the opening units is assumed as A. Any alphabet you can assume. Opening units is assumed as A. On this day, the opening last dividend, okay, last dividend, opening units is taken as A. Any alphabet you can assume. Any alphabet you can assume A. What was the dividend rate on this day? 15%. Listen, dividend in rupees is A into 15%. Is there a face value given in the question? Any face value you find, assume face value and proceed. 10 rupees. You change the assumption, answer will change. You change the assumption, answer will change. Okay, generally we assume 10. Anything else can also be assumed, but generally mutual fund starts with an NAV of 10. So face value will be 10. How much is the dividend? 1.5A. Last dividend. I've started with the last dividend. Okay, I've not altered the format, but started with the last dividend. What was the NAV on 31/3/2019 for the dividend plan? Units allotted is 1.5A by 45. 1.5A by 45. I don't know the A. I don't know 1.5A by 45 also as of now. I have no idea on both the numbers. 1.5A by 45. And only thing I know now is A plus 1.5A by 45, 21607. A plus 1.5A by 45, 21607. Leave some 5 lines. Come down and solve this and let me know what is A. A plus 1.5A by 45 equal to 21607. Any doubts on the number here? Equal to 21607. Come down. Divided by 46.5. 0 9 1 0 9 1 0. 20910. 20910. So I was able to get to the units one period before. I have to keep going backwards. Keep going backwards. It will take little bit of time. Forward is easy to do. Any doubts first on 20910? Okay. You need not write this. Any doubts on 20910? We'll be analyzing the next dividend, but before that, I'm showing you what has happened here. This was 20910. 20910 into 15% into 10. 20910 into 15% into 10. What's the number? 31. E6. Extra units is 697. And what has happened is, this is what has happened. This is what has happened in this period. You are generally used to doing the forward working. Generally used to doing the forward working. Any doubts on 20910? Any doubts on 20910? This is just a verification for you. Can we proceed? You need not write the verification part. This is just for your understanding. Clear? Can we proceed? When is the dividend before this? 2018. Opening units is B. Any alphabet, okay? Opening units is B. Any alphabet you can take B. Once I do the third time, things will become very clearer to you. Opening alphabet is, sorry, opening units is B. 10%. B into 10% into 10. B. B into 10% into 10. B into 10% into 10. B into 10% into 10. Any alphabet you can assume. I'll be assuming A, B and C. Printed answer, I think I've assumed all as A only. B into 10% into 10. What is the reinvestment NAV on this day? B by 50. 0.02 B. E plus 0.02b equal to 20910. B plus 0.02b. B plus, instead of doing in fraction, I've done it in decimal. B by 50 is 0.02. 0.02. B plus 0.02b equal to 20910. Are you getting this number? Some of you look a little confused. Is there a doubt? Understood? B plus 0.02b. I've done it in decimal. It will save some time. Fraction is also okay. Decimal is also okay. What is the answer you get for B? 20,500. 20,500. B equal to 20,500. Understood? Can we proceed? Clear? B is 20,500. I'm not showing a verification here, but you can check that also with this. When is the dividend before this? Opening units is C here. Opening units is C. First one was A, then B, and then now C. From 21,607, I got 2910. From 2910, I've got 2,500. I've got 2,500. Any doubts till this? Can we proceed? I'm not teaching any new concept. I'm just doing the same thing. One in the forward order we did, one now in the backward order. See, what is the dividend rate here? 12%. 1.2C. 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 What is the reinvestment NAV? If I don't have decimal issue, I will write it in decimal only. If it is coming as not a proper number, then let us do in fraction. Like if you divide by 45, decimal will not give us accurate number. 0.025C. C plus 0.25C. C equal to. Any doubts in this? Our approach has always been start with 20, end with 21,607. Institute says no, no, no. Start with 21, get back to 20, get back to 20, and 20 opening units into opening NAV is the investment. Opening units into the opening NAV, into the opening NAV is the investment made, is the investment made. Any doubts on this 20,000 number? Any doubts on 20,000 number? Able to understand this? Can we proceed? Any doubts here? I generally do in forward order, reverse order. I've written the rows also in the reverse, rows also in the reverse, and did the calculation. Any doubts on 20,000? Can we proceed? Clear? Come down in the end. Investment equal to opening units into opening NAV in bracket issue price. Investment equal to opening units into opening NAV. 9,20,000. 20,000 into 46. Mathematically, it will match our 20,000 into issue price. Issue price is 920 by 20,000. 6 per unit. The issue price is 46 per unit. The issue price is 46 per unit. Same thing we have to do for bonus plan. There it will be relatively easier because there we will not have this too many numbers. We just have some ratios and we keep proceeding. Relatively easier will be the bonus plan. This is also easy only because I'm not tried explaining anything here. I just told I will write in the reverse order. Understood the analysis? Can we proceed? Let me complete the bonus plan and then we'll take a break. Any doubts on this? Understood this? Clear? Okay. Next, analysis of bonus plan. Everyone done? Anyone still doing it? Anybody still working out? Can we proceed? Bonus plan. I am copying the same format. 8 opening units, bonus ratio, units allotted, closing units. 8 opening units, bonus ratio, units allotted, closing units. Okay, I want to see whether you are able to do on your own or not. Reverse order, see whatever you want to do. I will 100% do it in 2-3 minutes. See what you want to do. If you are not able to do after 2 minutes, do it with me. Do the bonus plan reverse order. That's the only thing I can tell you. And you can assume same alphabets A, B, or any letter. I've started getting the answers in live online. You also keep doing it. Keep doing it. I will anyway explain it, but I would prefer you to do the working. Relatively easier. That is also okay. And this is even less time consuming. The only thing is you have to write in the reverse order. That alone will have to take care. The issue price is 50 per unit. I'm explaining now. You keep doing it if you are yet to complete. We start with opening units as A. Bonus ratio is 1 is to 5. So allotment is A into 1 by 5, 0.2A. A plus 0.2A is the closing number, 30,000. You get A as 25,000. Prior to that, B is the opening units. Bonus ratio 1 is to 4. B into 1 by 4. You get 0.25. B plus 0.25 is 25,000. B is 20,000. B is 20,000. And some of these adjustments are tested in my MCQ examples also. You'll have to keep doing the MCQ examples. And any example you get a doubt, you can let me know the next session. Any doubts on this? Understood this? Our approach has been to do this way. This question wanted us to do it in the reverse order. Any doubts here? No new concept. Concept wise, it is the same. Calculation wise, it is little different. Any doubts here? Understood? Clear? Everyone done? Any doubts? Done? Take it. Let's take a break of 10 minutes. Okay, let's move to the next concept. Return for close-ended scheme. Now let us understand this first. In the practical world, when I buy mutual fund, I am given two choices. One is called open-ended fund. Second is called close-ended fund. There are two types of schemes which will be there in the practical world. Open-ended, the word indicates it is open. It is open for buying and selling at any time. It is open for buying and selling at any time. Open for buying and selling at any time. An open-ended scheme, I can buy or sell at any point of time from the AMC. AMC means asset management company. From the asset management company, I give them money, they give me units. I give them units, they return my money at any point of time. This can happen at any point of time. I can do it on any day. Close ended is closed for new purchase or redemption. Closed means they will tell an IPO date or an NFO date January 1, 2021. Some 5,000 people or 5 lakh people or 50 crore people, whatever number, purchase the units. After this, this will close on Jan 1, 2031. In between, you need the money, you cannot get the money. You invested in the mutual fund and suddenly you say, return my money. MF says, nothing doing. You can't come back to me. You can't come back to me saying that you need money. You invested, forget it. But this is not logical because I may have an emergency, personal emergency, and I need money. There can be a personal emergency and I am in need of money. MF is very clear. Don't even look at us asking for return of money, asking us for return of money. Open ended, open for subscription. Close ended, closed for subscription or redemption. Closed for subscription or redemption. So there is a problem here. So as per SEBI norm, mandatory that they have to be listed in stock exchange. Mandatory that they have to be listed in stock exchange. TCS, I purchase the share. I can't go to TCS and say, please buy back my share. Please buy back my share. I need money. TCS will say, you sell it in the stock market. You sell it in the stock market, somebody else will buy. So in a close-ended fund, I will buy and sell in the stock market. I will buy as well as sell in the stock market. Buy and sell as well in the stock market. In a open-ended scheme, buying and redemption, buying and redemption will happen with the AMC. Will happen with the AMC. You buy from the AMC, redeem with the AMC. In a close-ended scheme, buying can happen with AMC on day 1. Redemption can happen after 10 years. In between, if you want to buy or sell, find somebody else who's ready to buy, which will obviously happen in the stock market. You press a buy order, somebody else will press a sell order, and the transaction will pass through. Transaction will pass through. So under a close-ended scheme, buying and selling will happen at the price. Now this leads to one challenge. Challenge is, even a close-ended fund declares their NAV. Even a close-ended fund declare the NAV. NAV was 284. but in the stock market buying was happening at 282. The NAV was 284, but in the stock market people were paying 282 that day. Or silver had a huge rally sometime back. So this is a classic example. 146 was the NAV, but people were paying 150 extra 3%. Same silver on October 13, the real value 16.64, the NAV is 16.64, but people were paying 17.98. 17.98. This remote is worth 1000, but you are adamant buying it, started buying at 1500, started buying it at lot of buy and sell order. The real value of the remote is 1000. People keep pressing buy order, keep pressing sell order, lot of buy order, price starts going up. Price starts going up. So the real value is 16, but you are buying at 17.98. The real value is 146. You are buying at 150. It can be discount also. It can be premium also. It can be premium. So under a close-ended scheme, the formula is not NAV1, NAV0. The formula is P1 and P0. The formula is P1 and P0. NAV1 and NAV0 can be different. P1 and P0 can be different. NAV1 and NAV0 can be different, and the price 1 and price 0 can be different. By mistake, I purchased at 17.98. This NAV touched 20, but that day when I'm selling, it is a discount and it is at only 18 rupees. On the date of sale, it is a discount. On the date of purchase, it is at premium. Both the places I got hit. Both the places I got hit. When I'm buying, it is at premium. When I'm selling, it is at discount. My return will significantly go down. My return will significantly go down. Return will significantly go down. Able to understand the concept first here? In a close-ended scheme, Tata Nippon India Silver ETF. ETF means exchange traded mutual fund. Exchange traded fund or exchange traded mutual fund. The mutual fund is traded in the stock market. Is traded in the stock market. Only one reason for trading: to give liquidity to the person who has purchased it. I purchased. I can't wait for 10 years. I can't wait for 10 years. I need money. I need money. MF is saying, don't even come and look at us. We are not going to redeem. We are not going to accept new money also. No new money, no redemption. Still, if you want money, you press a buy order or a sell order. Somebody else will press a buy order and a sell order. The only problem is the real value of the calculator is 1000, but because you are very much eager to get it, silver price was 2 lakh per kg, but people were in urgency to buy. People were paying 2 lakh 10, 2 lakh 20, 2 lakh 30, 2 lakh 40. So when there is a huge demand for a product, suddenly it quotes at premium, and when the demand goes down, it may quote at discount. It may quote at discount. So close ended scheme, one practical data we have seen. Formula is not NAV1, NAV0. The formula is P1 and P0. This can also have dividend. This can also have capital gain. And if they allow reinvestment, reinvestment may also happen, but I haven't seen reinvestment and all. But there can be a dividend here also. There can be a CG1 here also. Only thing is you can't buy or sell at the NAV. You can't buy or sell at the NAV. You have to buy or sell at the adjusted price. If you are lucky, you may buy it at discount, sell it at premium. Unlucky, buy at premium, sell at discount. Don't want this headache, then I do a open-ended mutual fund. I do a open-ended mutual fund where it will happen only at the real price. It is like a fixed price shop and a bargaining shop. In a bargaining shop, you don't know whether you are winning or losing because you don't know what will happen in the end. In a fixed price shop, the real value is known. At that price only the transaction will happen. At that price only the transaction will happen. Able to understand the concept? I do not have a specific problem on this. I have an example, and then one question came in exam. I'll show that addendum material. Okay, let's first come to this. NAV as on 1/1/2004 was 10. 31/12/2014 is 12. 10 rupees and 12 rupees is the NAV. Dividend and capital gain distribution is 0.5 and 1.5. Till this, if you look at what is the NAV1? NAV1, can you tell me till this? 12. NAV 0. Dividend, capital gain divided by 10. This is the return for a open-ended scheme. This is the return for a open-ended scheme. I don't want any numbers and all. This is the return for a open-ended scheme. In a close-ended scheme, you may get more than 12, less than 12. You may pay more than 10, less than 10. 0.5, 1.5 you will get. 0.5 and 1.5 you will get. 0.5 and 1.5, there are no doubts. On 31/12, when I'm exiting, it is trading at what? Discount means lesser by 2%. Lesser by 2%. When I'm entering, it is trading at a premium of 2%. When I'm exiting, 2% less. When I'm entering, 2% higher. In the calculator, 12 minus 2%. So my exit happens at 11.76. Exit happens at 11.76. Unfortunate, can't do anything. When I entered, was it at a premium or discount? Participate, premium or discount? Extra how much? 10 plus 2%. How much is this? 10.2. Get dividend, get capital gain, divide by what? Now, in the calculator, tell me this first. 12 minus 10 plus 0.5 plus 1.5 divided by 10. Can you tell me for this? 11.76. Sorry? I lose approximately 5% because of that premium discount headache. Because of the premium and discount headache. Does this happen in the practical world? Yes. That is why I've shown you the practical data. So if you can track the stock market and buy during the day, you can do it. You don't want this headache, buy a open-ended fund. In an open-ended fund, I press a buy order with the mutual fund AMC. They take the money, give you the units at the NAV. Give the units at the NAV. You don't want to do it, another option is close-ended fund. If there is a close-ended fund, you can buy or sell during the full day. During full day, you can buy, sell from 9:15 till 3:30. Whereas an open-ended scheme, I press a buy order. Generally, if you do before 2:30, by the closing, they'll give you units. After 2:30, you do, next day closing, they'll give you the units. Next day closing, they'll give you units. You can pay to the mutual fund on a Sunday, on a Saturday, after 9 p.m., evening 11, night 11, anytime you can buy a open-ended. Money goes to them, they will give you the units the next day. Next day, before 2:30, by closing itself they'll give. After 2:30 you do, next working day. I personally bought one mutual fund on Friday 4 p.m. I pressed the order. Today morning I got the message that units have got allotted. So I did Friday 4 p.m. Monday night the units will get allotted, and they got allotted and I got the units because Saturday Sunday was off. So open ended you can do anytime. Close ended, because mutual fund does not do it, you need somebody else to do it. That somebody else is people like us. You press a buy order, other guy press a sell order. First, understood the concept? Can we proceed? The only problem with a close ended fund is, in case there is lots of demand, you will get indirectly paying a higher price, because silver, this happened really with the silver one. Today it is happening today with your global mutual funds. Global mutual fund means from India invest in US and other places. RBI has some restrictions there. So because of which the mutual fund house is not accepting money. Then what do? I buy from a friend of mine. Friend of mine is charging a premium now. Friend of mine is charging. The NAV is 100. Transactions are happening at 130, 140. So you can search today. the close-ended mutual fund ETF premium for global mutual fund. Global means outside India. RBI has put some restriction. So mutual fund is not giving you units. When they don't give and you still want, go to the stock market. Go to the stock market. But if you go to the stock market, be ready to pay a premium. Be ready to pay a premium. Understood the concept? Clear? Okay, let us see this. Open your addendum material. Addendum material. One book I would have given you. If you don't have the material with you, you look at the screen as of now. Page 11, question 4. Question 4. Okay, there's another doubt by a live online student. If you buy a open-ended from AMC, redemption is also with AMC only. It can't suddenly become an ETF. Open-ended, buy from AMC, sell to AMC. Close-ended, buy from AMC is possible on day one. Later that you can sell it, or you can wait. Buy on day one, redeem on day after 10 years. After 10 years, you can redeem with the AMC also. Okay. Consider the recent performance of a closed-ended fund. Of the closed-ended fund. Closed-ended fund means it is technically listed in the stock exchange. NAVs are given and they have given premium or discount. NAV is given and they have given premium or discount. Evaluate the average return based on geometric mean. Based on geometric mean. What is that? I'll make you understand. For an investor who bought 1000 units of the closed fund at the invitation, sold her position at the end of period 4. Sold her position at the end of period 4. Entered on day 0, exited on year 4. Geometric growth rate in NAV. Growth rate in NAV. Part 1 is something else and part 2 is something else. When did we buy here? Year 0. And when are we exiting? Year 4. Now write day 0. Day 0 investment. Day 0 investment. 1000 into 20 plus 0%. No premium discount. 20 plus 0%. No premium, no discount. I'm exactly paying 20. I'm exactly paying 20. 1000 into 20 plus 0%. How much amount I made? Investment. 20,000. 20,000. Clear? Year 4. Exit. I exit in year 4. I exit in year 4. Addendum question number 4. You can write that and then solve it. This is the extra set of questions which I've added in the material. Year 4. Exit. 1000 into what NAV I am exiting? 22.3 plus. It can be plus also, it can be minus also. Okay. Plus means very happy. I am getting extra on the last day. Premium. Any use of 1, 2, 3? No use. No use because I'm entering on day 0, exiting in year 4. Exiting in year 4. In between nothing happens. In between nothing happens. Can you tell me what is the exit value here? 23. And if I had not got the premium, if there was no premium, I would have got 22,300. Now based on geometric mean, ICI used a fancy word. Basically IRR approach they wanted. They wanted a IRR approach or considering time value of money. The geometric mean technically considers the time value of money. The time value of money is considered here. Year 0 investment, year 4 maturity. Year 0 investment, year 4 maturity, and I want geometric mean, basically doing something called as an IRR approach based on IRR. Where did you learn this? Maybe in your statistics and in CA inter. In CA inter, there was an area called realized yield approach in cost of equity, and in one example they used this concept called geometric mean. So when this came in exam in May 26, many students got worried that what are they asking. The worry was, answer I know now, but what does geometric mean? Total doubt there. What are they asking us to do in an exam situation? Student got panicked looking at the problem. Otherwise, geometric mean basically means considering the time value of money, you will have to calculate the return. If I do the simple mean 23,192 minus 20,000 divided by 20,000 into 12 by m into 100, that is your simple mean which would have happened. How much is the mean return every year? 23 minus 20 divided by 20 into 12 by m into 100. Because it is 4 years, we can use a shortcut even in the normal calculator. A shortcut in the normal calculator, and I say I did a shortcut only here. Normal calculator itself can use a shortcut. I'm repeating again, geometric mean technically mean on the amount you invest, you earn a return first year. On the second year, you earn return on return, return on return, return on return. So technically, it becomes a compounding effect. It becomes a compounding effect. Logically, it is like this. What is the amount I get on the last day? Listen, 23,192, listen, is equal to 20,000 into 1 plus the first year return, 1 plus the second year return, 1 plus the third year return, 1 plus the fourth year return. This R is called the geometric mean. Instead of writing like this, I can say 23,192, 20,000, 1 plus R power 4. 1 plus R power 4. 4 goes to the other side, it will become 1 by 4. 1 square root, another square root, answer is done. I need not do the 12 headache and all. 1 square root and another square root. 1 square root and another square root. 1 square root and another square root. Any doubts first on the calculation? I will write any doubts on the calculation. Now write the formula. Future value equal to present value into 1 plus r power n. Future value is equal to present value into 1 plus r power n. 1 plus r power n. What is the future value we get back? Keep participating. 23. Present value, what did we invest? 1 plus r power 4. Get me the answer to r. Divided by 20,000. 1 plus r power 4, square root will make 1 plus r square, another square root will make it 1 plus r. No 12 times, all that headache is not needed. 1 plus r power 4, 1 square root and another square root. What's the answer you get? 3 point. This is the return the person is generating. 3.77%. Any doubts on this? As an investor, I earn 3.77%. If they ask intern exited in third year, 3 years, 1 by 3 your calculator can't handle. Do IRR approach or do the shortcut approach which I said. But if presentation is needed, then I'll have to go through the IRR route. MCQ maybe shortcut can help. Second year also you can exit. First year also you can exit. First year, no problem. First year there is no simple mean or geometric mean, all are same. Second year, third year exit you are doing 1 plus r power 4, 1 plus r power 4, r power 3, r power 2. Any doubts on part 1? Any doubts on part 1? Okay, tell me what is part 2 requirement then? What are they asking in part 2? Geometric growth in NAV means what should I do? No, not written for each year. Without the, okay, so what should I do? You are in the right direction. Without the premium or discount, what should I do here? No, not concept 2 formula. Geometric growth, again the word is geometric. You not divide by 2. You are in the right direction. So tell me what should I do? You are in the right direction. So very simple. I am going to write future value as 22.3. Only one unit. They value as 20 and get the answer. 22.3 equal to 21 unit. Only one unit I am doing. 22.3 equal to 20 into 1 plus r power 4. This is the growth in NAV. This is the growth in NAV. My return can be more, can be less based on premium or discount. Based on premium or discount. I am repeating. When did we enter here? When did we enter? Day 0. What is the NAV on that day? 20. When did we exit? Year 4. What is the NAV on that day? Just compare these two alone. Just compare the NAV alone. Should I do into 1000? Your wish. Should I do for 1 unit? Your wish. Both are same only. Whether you do for 1 unit or you do for 1000 units or you do for 1000 units doesn't make any difference. Doesn't make any difference. Listen, listen, listen. Will do. Our return can be more, can be less depending on whether we are lucky or unlucky. Lucky is redemption at premium, entry at discount. Entry at discount. Unlucky is redemption at discount, entry at premium. Redemption at discount and entry. Here, entry no problem. Redemption is at a premium. So I got 3.77. NAV growth will be lesser than 3.77. Will be lesser than 3.77. Lesser than 3.77. Able to understand the concept. Why did they give in between number? Just to confuse us. Just to confuse us. Has no utility at all. Because I don't have any reinvestment plan. Nothing is there. So in between data is of no use. In between data. Now in exam this is not going to come. They'll suddenly use some other fancy word, something else may come in exam. That time how do we tackle? We'll have to see. So here let me do the calculation sometime. Approximately I'm getting extra 4% for approximately. So extra 1% comes every year because of the premium. Approximate, okay? Extra 1%. Exact calculation we'll have to only do approximately extra 1%. This number was 3.77. The NAV growth could be 2.77. Could be around 2.77. We'll do the exact numbers. We'll do the exact numbers. I've already got the answer in live online, but I'll do the exact numbers now. Understood the concept? Can we proceed? Next, growth in NAV. Geometric growth in NAV. NAV 4, NAV 0, 1 plus R power 4. If I exit in third year, NAV 3 equal to NAV 0 into 1 plus R power 3, which your calculator can't do. We will have to do in the IRR route. We'll have to do it in the IRR route. Second year you exit, NAV 2 equal to NAV 0 into 1 plus R square. 1 plus R square. Able to understand this? What is the NAV 4? 22 point. 2 point. And that was around 3.77, approximately 1%. Approximately 1, exact and all only calculations can give. So if we are lucky, we may get this way. Understood? Clear? Got the answer? So I have done geometric growth in NAV and we have also calculated the geometric return. Geometric return and geometric growth in NAV. Many people burnt their hands with silver purchase at the peak by paying a premium. Generally, silver was quoting at a very high price. People got into close-ended mutual fund. So much demand was there, people were not ready to look at the price itself. They ended up buying at any price, whatever price was there, they purchased randomly at any price, and that would have hit many people would be sitting today with negative returns in silver, who would have purchased, one physically also purchased, you are paying a higher price, and here to even more higher price was paid. Understood the concept of close-ended fund? Any doubts on this? One practical data I showed you, 8% was the extra amount people were paying. And today, if you look at global mutual fund, there are certain funds which are quoting at 20-25%. 20-25% extra. Any doubts on this? Can we proceed? Understood this? Clear? Okay. Next concept, front end load and back end load. Front end load and back end load. Let me first show the practical data. Okay. Front end load and back end load. Front end load was abolished in India from August 1, 2009, and hence no practical data. What is front end load? I'll explain. But in India, it was abolished by Association of Mutual Funds of India. Exit load can be something like this. What is exit load? I'll explain. Up to 10% of units nil, remaining units redeemed 2%, remaining units redeemed 1%, redeemed greater than 730 days nil. When I enter into a mutual fund, open ended mutual fund, the AMC doesn't want you to enter, exit in the next 5 days, again enter, again exit, again enter, again exit. If you keep doing this, the AMC is under stress. Why stress? Is the money they take from you, they invest it. Suddenly you want to exit, they have to sell their investment and give you the money. So mutual fund don't want people to randomly enter, randomly exit. So because to discourage this, they charge a exit load. Exit load means if the NAV is 20, I will subtract 2%, 1% and give you the money. Subtract and give you the money. Parag Parikh Flexi Cap Fund says, if you have bought 1 lakh unit, up to 10% of the unit, I will not disturb you. Up to 10%, you please take it, no problem. More than 10% you want to take, if the time period is less than 365 days, that is less than a year of your purchase, please pay 2% exit load. Pay 2% exit load. 365 to 700. Parag Parikh is the only fund which goes till 2 years. Many fund go only till 1 year. They go till 2 years. Till 2 years, you are exiting 1%. More than 2 years, you are free to take your money. You are free to take your money. ICICI Value Discovery Fund, up to 12 months. No limit, no 10%, 5%. Even one unit you redeem, less than a year, 1% exit load. More than a year, no exit load. More than a year, no exit load. Exit load is called back end load. Load basically means they are going to reduce this amount from the NAV. For example, in this question, you will not get 23,192. I'll get 23,192 minus 2%, minus 1%. Some percentage they may deduct and give. That was a 4-year question, but assuming there was an exit load. Assuming there was an exit load even for 4 years. Even for 4 years on the redemption, like I subtract securities transaction tax, like I subtract STCG, I may subtract exit load. I may subtract exit load. This is an income of the mutual fund, and this income is distributed among the balance unit holder. Among the balance unit holder get the benefit. You exit in an emergency, your extra 1% goes as an income to other people. Goes as a income to other people. In fact, Parag Parikh Mutual Fund in their income statement reported an income of 25 crore from exit load. 25 crore is the income from exit load. Only from the exit load this income came, and this income was distributed. Don't look at the other data there. The other data I'll explain later. 24.53 crore was the income only from exit load charged to the investor. Whoever in an emergency went out, they had to pay this money. This was for 2023 year. Okay. Exit load we have understood. Entry load, I can't give you any practical example because in India they have abolished it. What is entry load is when you enter, you have to pay extra money. Exit load is when you exit, you go back with lesser money. You go out with lesser money and enter with the higher money. Enter with the higher money, exit with the lower money. For example, NAV. NAV is 20. Enter load 2% means you have to pay 20. Exit load 1% means 20. You will exit at 19.8. Same day. One person will enter at 20.4. Same day, another guy who is exiting, he will exit at 19.8. 19.8. This is the concept of, in India, they have abolished front end load, saying that you can't charge this. You can't charge this. Still, we learn because it is a global understanding we are trying to do. Some countries will still have front end load. Front end load means entry, load means extra charge. Exit, on the exit, there is a charge. Front end load income is not there in any practical world for any Indian AMC. Back end load income 25 CR for one mutual fund we saw now. Understood first the concept? Clear? There are certain formula. I will explain the formula in the question itself. Let's come to 10. Unit price of a equity linked saving scheme of a mutual fund is 10. Public offer price is 10.204. Redemption price is 9.8. Front end load, back end load. We have to calculate these two. Go through it. There's nothing much in the problem. Go through it once. 9.8. Now, where can this become useful? This became useful. This is the question. I'll come to solving this in a minute. In your addendum, I may not do this question. Return computation, like we generally do. This came in May 26, but they added the entry load and exit load in the return compute. They added the entry load adjustment and the exit load adjustment in the return computation itself in May 26 exam. In May, or I may come back to this question little later, but the purpose is not to calculate that load percentage. That is a very basic question. But they added this adjustment. We did earlier 2-3 question. Any problem, I could have added an entry load adjustment or a exit load adjustment. Any problem, we could have added both the adjustment. Entry load, add to your investment value. Exit load, deducted from your redemption value. Understood first the concept? Clear? We will look at the addendum question and all later, but this is how institute tested it in exam. Coming to this question, now write entry load equal to public offer price minus NAV. Institute wants a percentage. For percentage, they give two options to us. You can divide by public offer price. You can also divide by NAV. Both will give different. When I calculate my profit margin, profit is sales minus cost, can be divided by sales, can also be divided by cost. And you will say profit margin 1/4 on cost, 1/3 on sales. So you can do on cost, you can do on sales. So institute has given both the option. You can divide by public offer price or you can divide by NAV. I'll give you both the answer. Okay. Divide by public offer price. Calculation is very simple. What is the public offer price here? 10 point NAV. Unit price is the NAV. Divided by 10.204 into 100. into 100. What is the percentage? Sorry, 1.99. 1.999 or okay, so 2% then. 2%. 2% is the answer. 2% is the answer. 0.204 divided by 10.204. 2% is the answer. Again, entry load 10.204 minus 10 divided by 10. This is more logical, okay? This is more logical. Dividing by the NAV is more logical because on the NAV you will charge and get the public offer price. Both will obviously give different percentage, okay? Both will give different percentage. Institute has given both the answers. Logical is dividing it by the NAV. What is the percentage you get here? Clear? Like that, we will do exit load also 2%. Front end load or entry load. Front end load or entry load. Any doubts on this? Understood the number? Can we proceed? Exit load split into two. NAV redemption price by redemption price. NAV redemption price by NAV. Again, this is more logical. Dividing by NAV. Dividing by NAV. Redemption happens at lower than NAV. Public are asked to pay more than the NAV. Public is asked to pay more than the NAV. Two percentages coincidentally it will match the numbers. That is coincidence. The other percentage and this will match. In this question, there is no linkage between the two percentages. What is the redemption price? 9 point divided by 9.8 divided by 10. 2 point coincidentally it matches this number. That is more of coincidence. Okay, 2.04 and 2%. 2.04 and 2%. Any doubts on the number? Clear? Understood the workings? Any doubts here? 2.04 and 2%. Back end load is still charged in the practical world, and I've already shown you one good example. Purpose is very simple. I want to discourage people to immediately exit, because when if lot of people are exiting immediately, I need money to pay them, and if cash is not available, they keep some amount of cash every mutual fund, but if that money is not sufficient, they'll be forced to sell their investment and return the money. Any doubts on the concept here? Understood? Clear? With this, my basic concept is almost done. 1 to 10 were my basic concept. I still have 1-2 questions to be done, but the base concepts are ready. 11 is a practice question for you. I want you to do this. Tomorrow's class, I may discuss this. In this 4 and 5, you ignore it because it is a theoretical discussion. You will not understand it now. 4 and 5, ignore it. Okay. 4 and 5, ignore it. 11, practice question for you. I will discuss it in the next session if you do it and come. If you don't do it and come, then there's no point in discussing the answer. Okay. So I want you to do, and then we discuss it in the next session. I'm not even discussing the problem. Try, able to do, great. Not able to do, send me doubts or look at the answer. I leave the I wouldn't want you to look at the answer. You send me doubts, I'll clarify. After looking at the answer or clarifying, you still have a doubt, we discuss it in the next session. But this is for you to do at home. Question 9 is nothing, it's not related to any specific concept. There is no specific concept related. Okay, and one more thing, go back to your concept book. Go back to the concept book. Concept 10, Write question 10. Concept 10, question 10. Concept 10, question 10. Concept 9, question 7. Concept 9, question 7. Concept 9, question 7. Concept 7, addendum question 4. Addendum question 4. Concept 7, addendum question 4. I hope every concept we have done the mapping till now. If I've missed any concept, you can let me know. But every concept, we will map the question number so that whenever you are reading the concept, along with that, you apply the concept. Done? Can we proceed? Okay, I'm doing question 9. It is not linked to any specific concept. It is an altogether different kind of a question. I haven't covered any specific concept in the concept book for this. XYZ plan, a hedge fund, currently has assets of 20 crore. Mr. A, the manager of the fund, charges 0.1% of the portfolio asset. In addition, he charges an incentive fee of 2%. Incentive will be linked to gross return each year in excess of the portfolio maximum value since the inception of the fund. Maximum value the fund achieved so far is 21 CR. Benchmark return, fee payable, if it's 29%, 4.5%, negative 1.8%, something is there, but let me spend time and then we start solving. XYZ plan, a hedge fund. A hedge fund is a specialized type of a fund, not mutual fund, not mutual fund, specialized type of fund which takes extreme amount of risk. It takes extreme amount of risk. It will invest in cryptos. It will invest in some loss making companies. It will invest in companies which are under the verge of insolvency. So it is allowed to take extreme amount of risk. The meaning is that, okay, it can take lots and lots of risk it wishes to. This has an asset of 20 CR. What is this 20 CR? Some people have given the money and the pooled money together is 20 CR. Manager of the fund charges 0.1% of the portfolio asset. So I charge 0.1% into 20 CR is my income. 0.1% into 20 CR is the income I charge because I do work for you. I am the fund manager. You all have given me 20 crores. I will be charging you 0.1%. In addition, I'll also charge an incentive fee. Incentive is generally on profits. If I earn profits for you, you have to give me extra. You have to give me extra. One is fixed. Fixed is 0.1%. Addition to that, I may charge an incentive fee. 2%, and they have said how incentive fee. Gross return each year in excess of the portfolio maximum value since the inception of the fund. That is, from day one, whatever was the portfolio maximum value, if I earn more than that, for the extra value, you have to pay me 2%. For the extra value, you have to pay me 2% incentive linked to gross return in excess of the portfolio maximum value since the inception. Inception is beginning of the mutual fund. From the beginning, if the value goes above, you have to pay me 2%. Maximum value the fund achieved till the inception is 21 CR. So from 20, if I make it 21, only fixed. Above 21, you have to pay me variable. You have to pay me variable. If I make 20 as 40, 40 minus 21 into 2%. 40 minus 21 into 2%. 40 minus 21 into 2%. Anything above, if I make it 40, I don't know what I have made and all. If I make it 40, I will charge you 2% on the extra. 0.1% to 100% I am charging. 0.1% is the 100% charge I am doing. Benchmark return to make Mr. A eligible for the incentive fee. Any idea what is asked here? I've explained the question. What should I do here? least how much I should earn so that I'm eligible for a incentive. So that I'm eligible for a incentive. 20 CR, I earn 2%. 20 CR plus 2% is 20.4, no incentive. No incentive. You should touch 21. You should touch 21. Now write benchmark return equal to 21 minus 20 on 20. At least touch 21. At least touch 21. There are formula. Don't go through the formula. Logic is very simple. 20 should touch 21. Minimum how much they have to earn? 5%. Anything above 5% I earn, I will get variable incentive. I don't earn above 5%, fixed fees will be charged. Fixed fees will be charged. Yeah, tell me. Yeah. No. So it can be defined. So his point is this 0.1% should I reduce from 20 CR and then calculate the return. The word used here is gross return. Gross would mean without expense. Again, with expense is difficult to do because the return defines the expense. Because if return is more, expense will be more. Return is less, expense will be less. So generally it is on the gross amount. Generally it is on the gross amount. What is the percentage here? Did we earn 5% in scenario 1? There are 3 scenario given. Did we earn more than 5% in scenario 1? Yes, you will get variable incentive. We'll do the calculation. Did we earn more than 5% in scenario 2? Did we earn more than 5% in scenario 3? No. If you don't earn more than 5%, you will be paid. You will be paid only the fixed fees. Only the fixed fees. I generate negative return. I generate negative return. Will I be paid fixed fees? Yes, because the fixed fees is for my effort. Result came, not came, I am not bothered. Whether I come and work here. If I am working in an audit firm, whether the audit went good, bad, you please pay the salary. Salary has to be paid. So that 0.1% is for my effort and time. Good results come, you give me extra incentive. Results do not come, give me the basic fee. Next, incentive or total charge. Total charge split into 3. Variable return, sorry, 29%, 4.5%, negative 1.8%. 29, 4.5, negative 1.8%. I generally do it as a chart presentation. In exam, you can do a table or chart. Chart, provided you are able to explain properly, or do it in table. Printed answer, everything will be in table. In class, I generally try to do it in chart, easy to explain. Closing value, 20 plus 29%. 25.8 crore. Closing value, 20 plus 4.5%. 20.9. 19.64 plus 29 plus 4.5 and negative 1.8. They said return variable is about 21. Since maximum value since the inception. Maximum value since the inception, and the maximum value since the inception is 21 CR. That is what is defined in the question. Maximum value since the, and inception is not 20. Today is 20. Current value is 20. Okay. Fixed fees. Now listen. Fixed fee can be defined in the contract. It can be on original 20 crore. It can be on the closing 25.8 crore, or it can be on the average of 20 and 25.8. It can be on average. See, It is point whatever 1%. On what amount should I charge? Opening amount, closing amount, or average amount can be defined. Can be defined. We do some wealth management for clients. We charge it on the opening amount. We have a fixed charge on the opening amount and variable charge on the profit made. So fixed we charge on the opening can be defined. Institute charged it on the opening 20 CR on the opening. Somebody says, sir, I will do it on 25.8. Technically, you are right, but it has to be defined in the question. It has to be defined. No definition. Institute does it on the opening value. So 0.1% into 20 crore. How many lakhs is this? 2 lakh in all the three scenario. 2 lakh in all the three scenario. Can be on opening, can be on closing, can be on average. All these are extra thinking which you need to do because assumptions can change answer. Variable fees. Variable fees. 0, 0. We are not even touching the 21 CR limit. Not even touching the 21 CR limit. Not even touching the 21 CR limit. There can't be a variable incentive. 25.8 minus 21 crore into 2%. Into 2%. This is, I think, 9 lakh. I have done good work. You pay me extra amount. Not so good work. You pay me my base fixed fees. Base fixed to has to be paid. Fixed 100% you have to pay. Variable will be defined as per the terms of the contract. Clear? Any doubts on this? Understood the working? Either ways, assumption. Opening value is 20 CR, closing value 25.8 CR, average value 22.9 CR. We personally do wealth management where we charge clients on the opening value. On the opening value. Next year it will be charged on 25.8. Next year this will become the opening value and will be charged on 25.8 for the next year. Can be either ways. Okay. Now I want return equal to question mark. Return equal to question mark if the incentive totally paid is 50 lakh. You do whatever you want to do and give me the answer. Reverse working. Overall amount is 50 lakh. What is the return earned if the overall amount paid is 50 lakh? Amount paid is 50 lakh. You do reverse working. I'm not explaining anything. Amount paid is 50 lakhs. How you want to do, up to you. I will explain in some time. 50 lakh is the total amount paid, variable plus fixed. What return did I earn for the investors? I want the return percentage. I've got the amount in live online. Get the return percentage. Return percentage to get an incentive of 50 lakh rupees. One, get the return percentage. What's the percentage you got? Some of you have already done. I've got answers here as well as in live online. I'll discuss it in 1 or 2 minutes. Okay. Fixed continues to be 2 lakh. Variable is 48 lakh equal to 2% of value in excess of 21. 2% of value in excess of 21. This is basically 2%. This is basically 2%, which is 24 crore excess value, and value is 24 plus 21, 45 crore is the closing value. 45 crore is the closing value. This 48 lakh is equal to 2% into closing value minus 21. If at all I want an equation, closing value minus 21, closing value minus 21. 48 lakh by 2% is 24 crore, closing value minus 21 crore, closing values, and return is 45, closing minus opening by opening into 100. Closing minus opening by opening into 100. If I earn 125% for my clients, I will get 50 lakh fees. I will get 50 lakh fees in this question. I will get 50 lakh fees. I want to alter this further. We earned a return of 25%, earned the fees of 20 lakh. What is the variable incentive percentage? Like that, I can keep doing anything. I give you the closing value also, I give you the fees also, but tell you the variable incentive percentage is not 2. It can be 4, 5, 10, 15, 20. Anything can change. Anything can change in a problem. I keep telling this only. With AI tools, you want to revise something, put the same question, tell it to modify the question and give, and then you start solving. Modify as a reverse working question, and you solve. Your concept clarity will be top notch. Any doubts on this? Understood? Clear? I'll quickly revise and end the session. Any doubts till this? Got the number here? Any doubts on 125%? Again, I'm repeating, reverse working is generally perceived to be little difficult. It is only one thing. Walking straight is okay. Walking backwards become difficult. Same logic is here. Your mind only thinks this way. When you have to think in the reverse, what will come, what will come. When I tell alphabets, straight order, okay. Reverse order, I'll have to think extra and do. Sometimes students find it difficult. Can we proceed? Okay, quickly revising now. Today, I touched upon few concepts. I'll revise those alone. First concept I touched is return for close-ended scheme. Open-ended scheme, entry anytime, exit anytime. Keep participating. Return for an open-ended scheme is what? NAV1, NAV0, D1, CG1. Close-ended scheme, P1, P0, D1, CG1. P1, P0, D1, CG1. P1, P0, D1, CG1 divided by P0 into 12 by M into 100 are the IRR approach. Concept 9, the return which we calculate can't be calculated using the formula. That is a wrong way. Still we will do only formula, but if question specifically has indication, please do the IRR approach. IRR approach, initial outflow and in the end inflow. Payout plan, multiple inflow, multiple inflows, then you have to do proper IRR calculation. No shortcut, nothing will work. And last part, front end load and back end load. Front end load is an entry load, additional charge on the day one. Exit load is on the last day. exit load is taken out from your exit value, and entry load is added to your entry value. Examples, please do it. Please and please complete your examples with the class only. Then only you will get grip on this area. And one question I have told you to do, I'll discuss that in the next session. And next session, we are starting with NAV. We have been using the word NAV till now. Next session, the NAV will start. Clear? Then we'll end with this.